Introducing Inside Retail with Marty Higgins. Insider news and engaging conversations with cannabis leaders, brought to you by Urbana and highly capitalized network, navigating the cannabis retail landscape with innovative strategies and customer-centric solutions. Join Marty Higgins as he brings you insider stories and cannabis retail market trends. This is Inside Retail with Marty Higgins.
Hi, this is Mark Collins for Highly Capitalized. Here, I'm with Sander Zagzebski from Clark Hill. He's the chair of the Clark Hill Cannabis Law Practice. And Sander has been very active in the industry now for the last 10 years or so, making huge contributions. And also, I was pleased to find out that Sander was not only the Benzinga Law Firm of the Year, and Sander and his team were picking up the prizes at Benzinga, but he also won Law Firm of the Year from MJ BizCon too. So wonderful to have Sander here, a leading
Thank you, Mark.
in the industry. And I'm also joined by Marty Higgins. Marty is the CEO of Urbana, one of the most dynamic retailers here in California, in Northern California, in San Francisco, headquartered. What I love about what Marty's doing is he's focusing now on really bringing that full experience, not just retail, but consumption lounges to the cannabis industry. And I think that from my perspective, that's the future of the industry. But let's get right down to it. So Sander's an expert not only in matters California, but matters nationally. And I wanted to ask Sander, what does he think about the outlook in California? And I know that's a very big question, but is there hope for companies in the market now? And what is the outlook for the future?
Oh, there's definitely hope, Mark. And let me correct a couple of things you said just real quickly. Although I'd like to take all the credit, it was our cannabis industry group at Clark Hill that won Law Firm of the Year at both Benzinga and MJ Biz in 2023. We're quite proud of it, but we have actually one of the largest, if not the largest, cannabis practices among the AmLaw ranked law firms. And I'm the chair now, and I had co-chaired it last year with my partner and still colleague, Bob Hoban, whom most of you probably know if you've been in the space and you haven't lived under a rock for the last 12 years or so. But anyway, what's the outlook for California? I think California, I would say the best outlook is cautious optimism. And what I mean by that is the big news, again, is rescheduling. And the most significant impact of rescheduling in the short term is going to be eliminating the application of 280E to cannabis companies going forward. So what do I mean by going forward? Well, going forward means once that regulation takes effect, 280E will no longer apply. It will not do anything for accrued 280E liability from the past. And so companies that have built up a big 280E liability will continue to owe those taxes. So it doesn't make it go away, but it eliminates it going forward, which means that the operating businesses will be able to will have a better time from a cash flow perspective, and of course they will just be able to operate like normal businesses. What it doesn't do, unfortunately, it doesn't really affect the basic economics of the California cannabis industry. And what you don't need me to tell you that California is a bit oversupplied at this point. And so for the last several years, we've a lot of folks have struggled just from a supply and demand perspective. There's a lot of weed, and a lot of folks have been trying to figure out how to find some pricing power and how do they differentiate themselves. And it's nice to be on the show with Marty, because Marty has a different model, and a consumption lounge model is, it's like, do you buy your beer from a liquor store and drink it in an alley, or do you buy it at a premium price in a social environment? And if we know from experience that people do both, obviously, but a lot of folks prefer the latter option, and that's what I think Marty and his group are putting together, and that's exciting. So I would certainly think of that as a bright spot. And I think in the mid to long run, rescheduling is going to have a big positive impact on California, because again, California is the epicenter of weed in the United States, has been for decades. arguably is the epicenter of weed in the world. And so once as rescheduling takes place and companies can begin to deduct their ordinary business expenses, things will shake out. In other words, the dust will settle. Winners and losers will be more easily identified, and I think new capital will certainly come in as clarity comes, or as things get into focus, if you will.
Yeah, that's a really optimistic and I think real point of view. It's almost a cautious optimism. I like it, as you put it, a cautious optimism that is has a little bit of excitement with these consumption lounges. So, Marty, if I could ask you a little bit about consumption lounges, it's such a hot topic now. I was reading the recently published research that shows that particularly the younger folk are choosing non-alcoholic beverages as part of their lifestyle and part of their social life. So do you see this is that one of the drivers of your decision to, really embrace consumption lounges over the years? And you must feel pretty good that your vision is sort of coming into reality with the fact that consumers want this consumption lounge experience.
Yeah, absolutely. I mean, we're obviously excited to read the same type of reports that I think you've read, where up to 69% of all young people under 25 and between 21 are favoring cannabis over alcohol. And it was a vision that I had when I first got into cannabis in 2015, was the idea around just what Sander was talking about, that, hey, we've got this alcohol, these things called bars are really popular. Well, what if we connected one of those to our dispensary? And so that's what we did. And we were fortunate to have 2 of the only 4 smoking permits in the country back in 2016. And fast forward to, well, where's the intersection of cannabis and socialization today? And, we've seen it on large scale festivals, concerts, whether, illegal at the time and people just consuming, or now with actual consumption areas or state fairs with cannabis contests and consumption areas. If you look at the brands across the country, there is and it certainly mirrors traditional CPG and consumer behavior, is a flock and a flight towards lifestyle type brands. Well, that includes a lifestyle. And that lifestyle is not just going to a concert or some big event and sneaking a joint, but to meet a friend instead of for a glass of wine, for a joint, to go to the events and type events that we host, anything from yoga and guided meditation to speed dating. It's really all over the board in terms of attracting people out to invite them to share an experience, because we know that cannabis is best shared with a community, with friends, and enjoying an experience. And so what you're seeing is a lot of lounges out there now are opening up and actually geared towards a nightlife, inviting people in that used to go out and pair their evening with alcohol, are now looking for a break from alcohol, looking for different types of events. And so that is what I think is gaining popularity that already exists. Now there are a few other options to do it, and it's a more is more case for us. And it's certainly 8 years later, playing into a vision and an idea that I had, that people want to go out and meet together, do it in a safe space, a regulated space, and enjoy cannabis.
That's beautiful. I really look forward to actually going to the consumption lounge, Marty, because I've always missed that. I miss the community, and what you're saying is all about community, and I love that. Back to Sander. Sander, as the chair of the Clark Hill Cannabis Laws Practice, I know you have your finger on the pulse in many different areas of the market. But what opportunities do you see, particularly around M&A? And there's a lot of talk about distressed asset sales. Do you see that as being a main feature for the rest of 2024, or what's your outlook on what are the main events that are happening in finance in California?
Well, I mean, it's absolutely, if we took out the distressed transactions, I don't know what anybody'd be doing with their time, right? It's the industry right now nationally has a lot of debt that needs to be worked out. for lack of a better word. And so most of the M&A transactions that we're seeing have some sort of distressed element to it. Now that doesn't mean it's being pulled through a receivership or some sort of bankruptcy alternative, but it just means that there's that one of the motivating factors is difficulty with some either debt for borrowed money or liabilities to your landlord or liabilities to your supply chain, that kind of thing. And I think California in particular, because it does have it is such a big market, and we have a lot of suppliers and a lot of license holders in sort of every category. It's felt the pain is felt perhaps more a little more acutely in California than it is in some other states, but it still has been a couple of rough years for the industry. You don't need me to tell you that. In fact, if you look up M&A transactions, when's the last time you read about a very sizable good news M&A transaction? It's been quite a while. The news has been MedMen filed for bankruptcy protection in Canada, and they're in receivership in the United States, selling off their last remaining assets. I mean, rewind a few years ago, and they were one of the top names. And so long-winded way of saying, yes, M&A is happening. It's active. There has always been, the last few years, and even more than the last few years, there's always been in cannabis a sort of wider than normal gap between the pricing expectations of the entrepreneurs and the pricing expectations of call it the money side or the capital markets. And that has, I think, persisted, although it's narrowed. Tough times tend to get people a little more realistic, but that gap still exists. So a lot of the deals that you're seeing are deals that have to be done, aren't necessarily deals that people want to get done. And again, when do you have to do a deal? Well, usually it's because of that distressed element that's sort of forcing the conversation. So yes, we're going to see that. I anticipate we're going to continue to see that through the end of the year. Although what I think is really happening now is something that we also saw in 2020. The election always sort of gives people an excuse to sit back and sort of wonder what's going to happen after the election. And the election combined with the rescheduling, because the as we talked about before, Mark, I think the calendars sort of sync up, right? Those events are going to happen relatively close in time. It gives people a reason to hit pause if they can. So I don't think M&A is going to accelerate. I just think they're going to continue to be we're going to continue to see the deals that we've seen, and the distressed element is going to be what drives it. After rescheduling, assuming it happens, then I think you start to see a pickup in more good news deals. And I think you see people that are going to come into the industry. I think they're already quietly, and in some cases not so quietly, assembling a war chest, because what they are going to want to do is acquire assets to operate in a post-280 environment without, free and clear of any 280E liabilities. But until that point in time, I think people are kind of hanging on a little bit. And so I don't see the uptick for a couple more months.
Great. Well, look, Sander, that still is, it sounds like a very, balanced view of the market. On the one hand, there's still opportunities, but on the other hand, there's a lot of things the market has to work out. But I'm here with Sander Zagzebski of Clark Hill and Marty Higgins from Urbana, and we're here with Highly Capitalized on Inside Retail. So I'd like to, Sander, ask. I'm going to come back to you in just a moment. I'm going to ask you in just a moment what beyond California does the future of the national industry look like? Because I know Clark Hill is a national practice, so you must have that view too. But back to Marty. Marty, from what Sander said, he has I think, a very balanced view of the market. How do you see the cannabis industry shaping up over the next few years? I know you're, and I think it's a great bet on consumption lounges, but beyond your Urbana purvey and purview, what do you see the industry shaping up in the coming years? Is it going to be more consolidation? I'm reading that there was like thousands of brands. Now we have, what, 700 brands left? There's been a pretty big shakeout. How do you see the shaking out?
Well, just to elaborate on what Sander was saying, I mean, yes, the shakeout is going to continue, right? I mean, M&A is everywhere. Opportunities in the retail sector are brought to me on a daily basis, and I'm certainly tracking and plugging into just other happenings that are in the marketplace. I believe that 280E and the changes of the rescheduling, while not a magic bullet by any stretch of the imagination, what it does is I think it gives some operators a chance to be and get to a positive EBITDA or positive cash flow, and allows them to either accelerate, maintain their position. So maybe that number of brands out in the space today holds firm, and we start to see some expansion and overall growth. But basically, I'm using that as a first step towards the solidification of the market here, and what by and large has been largely dislocated over the last 24 months. I think we can all agree on that. But and so I think it's a needed boost and wind in the sails of many operators, and I'm looking at that as some slight turnarounds in the biggest stage in the world of cannabis as a nice story for turnaround. And certainly that's what I'm hearing in a response to that news of rescheduling is, more in-depth conversations, curiosities from investors, interest from investors, to which has been, fairly quiet over the last 2 years.
No, that's great, Marty. I think you also share that balanced and nuanced view of the market. While a lot of things still have to be worked out, I think there's still pockets of opportunity. So, Sander, please excuse me. I hope I didn't interrupt you earlier. There's a slight lag on the video here, but I wanted to ask you again. The question I was hoping to ask you was, looking beyond California, bearing in mind Marty's been through the wars. What are you seeing from your other clients? You have, how many attorneys, by the way, are in Clark Hill? I heard there's 450. I know they don't all work on cannabis, but it sounds like a pretty big practice. Can I just ask about Clark Hill a little bit first?
Oh, sure. I mean, we have roughly 700 lawyers and professionals in the firm. We're an international firm because we have 2 international offices. We have an office in Mexico City and an office in Dublin, Ireland. And so we have a transatlantic practice because Dublin is sort of the gateway to the European Union for many companies, including technology companies. So in terms of our kind of core practices, we're most of our lawyers are in the continental United States. We're geographically dispersed. We're headquartered in the Midwest. We're actually headquartered in Detroit, Michigan. And so what's nice about that is our rates are more Midwestern rates, even though it's nice if you're, I'm in Los Angeles, as you know. And so my rate as a 27-year practicing corporate securities lawyer is much more modest in comparison to some of my colleagues in some of the LA-based firms and places I used to work. But it's good for the cannabis industry because, again, the cannabis industry remains in sort of growth phase. It's not as mature as most of the other industries that we operate in. And so our cannabis industry group, we have roughly 50 lawyers in the firm that touch cannabis on a regular basis and are part of our practice group. That doesn't mean they're full-time. We do, though, have, I would say 12 to 15 lawyers that are close to full-time in cannabis. I'm frankly not one of them. I chair the group, but I'm probably 40 to 50% cannabis in terms of the clientele, and the rest is a mixture of technology and sports and entertainment and media, things like that. So, and I'm a corporate securities M&A private equity lawyer by training. cannabis for me is more of an industry vertical, but within our practice group, we have regulatory lawyers, we have litigators, and real estate lawyers, and tax lawyers, etc. So it isn't, it's those folks that give us the multidisciplinary practice, the well-rounded practice, which is why we compete favorably for Law Firm of the Year at some of these conferences. I think you were gonna ask me a more substantive question, but I got sidetracked into the pitch about Clark Hill, so I forgot what you were asking.
Thank you, Clark. I just wanted to remind our viewers here on that we're with Sander Zagzebski of Clark Hill and Marty Higgins of Urbana. And I was loving what you were saying, Sander, because I know you have been in the market, and I know you're not totally devoted to cannabis, but you have a very good view. But what that all says to me is that you can answer that, that outlook question, which I was asking you, what do you see as the national, moving beyond California, what do you see as the national outlook? I know things are cooking in Ohio, Pennsylvania, the East Coast is cooking as well, but New York is trying to, get back together again with its enforcement of the banning all the illicit stores. But separating out all the noise and the bustle and the jumble of the industry, what's the outlook really, Sander, from your perspective, from your vantage point, I should say? Well,
I think the outlook is quite good, and keep in mind, we're a law firm. I mean, we're mercenaries. We charge by the hour, right? So we make money in good times and in bad. I hate to say it that way, but it's somewhat true. So when I say the outlook is good, what I mean, both for our practice, it's good because there's always work for us to do. But for the industry in general, it's good because we are, I think, seeing a relaxation in federal marijuana enforcement policy formally for the first time in over half a century, right? So however you look at it, that has to be good news. And where what I see it meaning going forward is 280E goes away. It provides a very investable thesis for the first time in several years, where people can now go out, they can buy assets that are good assets, operate them in a post-280E environment, and they can begin to deduct their ordinary business expenses. And why is that important? Well, so the accounting game for cannabis companies has directed them into this model where they've had to try to maximize their cost of goods sold and minimize everything else. And that's the world they've lived in for a long period of time. Now they can begin to do what other companies do. They can incur the expenses that other companies incur, and they can begin to experiment with models that they haven't really been able to experiment with before. And I think that's going to allow the industry to grow in a more natural way. In other words, you're not shoehorning everybody into this weird box where they have to try to maximize their cost of goods sold. And so over time, I don't think it happens overnight, but over time, I think that the macro picture is going to be fantastic. Now, if you look nationally, it's still a state by state, and even within the state, sometimes a local jurisdiction by local jurisdiction market. So you still have you have states where there's pricing power because they're more limited license jurisdictions, and individual companies are able to operate with more pricing power, and so those places are going to do fine. New York has been on everybody's the tips of everybody's tongue for the last couple of years now, because they're the biggest market outside of California in the United States, right? And they've had a lot of challenges, and you mentioned it with all the unlicensed locations, and they're cracking down. So we don't need to get into the detail there. But when New York figures out how it's going to work, undoubtedly it's going to be a major player, just because you have both consumers and money, sitting there in the same zip code. And and then everything in between is, I think, going to be highly localized. But over time, the downside about me is not only did I go to law school, but I was an economics undergrad, so I can just sort of talk about crap, and sometimes it makes sense. And I think that eventually we're going to have to figure out, what happens when interstate commerce opens up. There will be a day. I think we can't deny it. I don't know exactly when it's going to be, but there will be a day when you're allowed to ship weed across state lines. And I think California at that point in time is the big winner, because like we said earlier, that California is the gold standard of cannabis, and I think has been for several decades. I think between now and then, if you're in Marty's business, you're that's probably where the fun is, right? Because you're looking to differentiate yourself from a retail experience perspective, right? How can I build something now that we're eliminating 280E, we can start expensing things that we couldn't expense before. I mean, he probably can't talk about it here, but Marty must have some war stories about 280E and figuring out how to price all the stuff he has in his locations. But he can now operate this a little more normally, and start to figure out how to make his places, how to appeal directly to his consumer, right? And to provide the experience he wants, and do it in a way that's most profitable for his business. And I think in all likelihood that's where the near-term opportunities are going to be, because that's where, when 280E goes away, that's low-hanging fruit as I see it.
Yeah, no, that makes a lot of sense, Sander. Thank you so much for that perspective. Marty, I'd like to, we're running out of time here, so I'd like to just land on one last thing, which is a lot of retailers follow Highly Capitalized Network, and of course, this program is called Inside Retail. So what are the tips and tricks or critical success factors that you could share with your fellow retailers in cannabis? I know, for example, Mike Bitar from Grupo Flor, he follows Highly Capitalized, is very interested in what your opinion is on what advice would you give to other retailers who are seeking to differentiate and position themselves in the market?
Well, I think that if you're new and you're coming into the space, you're coming into a space where you have a lot more options about location. And Mike recognized that early on, and I've always acknowledged him for landing one of the first locations in a traditional retail mall. And so if you can go for that A location, go for the A location. Secondly, brands matter. Your store brand, your presentation of it, as well as any white label products that you may carry into the market. Because that will set up a distinction and a differentiation that we pride ourselves on. From the minute you walk into an Urbana, it's unlike any other retail destination in cannabis that you'll find. And that is one of the things that we look at in differentiation in a market that's headed towards homogenization, meaning we all carry the same 80% of the same products. What's the difference? We like to think at Urbana, it's our people, it's that hospitality approach to servicing the clientele. And then lastly, there's been so many changes in technology, is that about a year ago, we went and looked hard at our tech stack. And we ended up changing every single component of the tech stack at that time to pick up some efficiencies and to capitalize on either marketing to our own client base and or picking up efficiencies on margins. So those are the couple of quick tips and that I could offer up. And thank you, Mark, for having us here today.
No, this is great. I mean, I am inspired by what you're saying. It is true. Location really does apply to cannabis retail as much as real estate generally. But thank you both very much. I'm here joined today with Marty Higgins from Urbana, the CEO of Urbana, and Sander Zagzebski from Clark Hill. I would like to, gentlemen, ask you one last thing. Please, Sander, where can people find out more about you? I know we could find you on LinkedIn, Sander Zagzebski, and I know you have some socials and so on you'd like to share, please.
Oh, sure. I think like the best place to find us is just our website, clarkhill.com, kind of what you would expect. And you can certainly look me up, Sander Zagzebski, on LinkedIn primarily. And if you don't want to figure out how to spell that, you can look at Mark Collins's contacts, and I'm probably the first Z that's going to come popping up there on the last name.
Well, I always admired that when everybody was zigging, you were zagging. So that's what
Yes.
you have to remember. And Marty, where can people find out more about the Urbana Consumption Lounge, and when can I go and visit you?
You can find us at urbananow.com. Also at urbananow on Instagram if you're looking for us there. Marty Higgins on
Martin.
LinkedIn if you want to
Martin Higgins.
directly. And yes, Martin Higgins. And I look forward to seeing you both in our new lounge in
Fantastic.
Oakland
I can't wait, Marty. I'm looking forward to it. The highly capitalized team will be there with our cameras and lights, recording the event, and we'll be delighted to be there. Thank you so much, guys. This has been an episode of Inside Retail, exclusively on the Highly Capitalized Network.
Introducing Inside Retail with Marty Higgins. Insider news and engaging conversations with cannabis leaders, brought to you by Urbana and Highly Capitalized Network, navigating the cannabis retail landscape with innovative strategies and customer-centric solutions. Join Marty Higgins as he brings you insider stories and cannabis retail market trends. This is Inside Retail with Marty Higgins.